Test, test. Hey, welcome everybody to the 40 Finance channel. Just checking in here on a day that we've seen some bounce backs from the stock market that was tanking last week, particularly on Black Friday. And the question I've been thinking a lot about over Thanksgiving and even before that really is just what direction do we think this thing's going to land over the next, call it 60, 90 days, heading into late January, February earnings reports, knowing that interest rates, Chinese government, if you want to throw that in, virus variants, supply chain issues, holiday sales, all the things that seem to be uncertain right now has really been weighing on my mind, and I think that it makes it very hard to look at a stock screener and say, like, man, this stock for sure has a nice leg up coming, right? We know we have stretch valuations for just about everything. Some of that makes sense. With lower interest rates, there's going to be higher valuation multiples on things. But, you know, when you start getting into the 70s, 80s, 100s plus on PE ratio, that's when it starts to get scary. And in some cases, we have companies with huge market caps that have, you know, no PE ratio, in prices hundreds of dollars, in prices and price to sales 30, 40 times. So it's, while, you know, it's easy to say, I'll wait for a correction, if you think about it more broadly, how much of a correction would we have to have before you started to say, this stock is so on sale, I have to buy it now? And that's just where my mind's been going lately. So I thought I'd just share that, look at some things here on the live stream. And I think at some point we're all going to have to pick a side. Either the market is too hot and you're bailing temporarily, not necessarily selling, but just taking a step back, or you're going to come up with a different strategy. For me, I have decided that I'm going to add a little ETF to my portfolio to kind of balance out the stock portfolio I share with you guys, and that will be the QQQ, which is not necessarily undervalued, but I just did a whole video on it, and I'll go into the details of it when you guys watch that video that comes out a little bit later. So take a second to say hi to Mohammed. Good to see you. And you're asking about Wish Context Logic. For that one, I'm not sure how they're doing today. I did a video on this one a long time ago when it was running up. And, you know, where my mind went was to the App Store and looked through the reviews, and not a lot of people were happy, okay? The service of the company was, not good. And there was a lot of complaints. And as soon as I read that and kind of looked over how their system operates, I was not interested in it. So I don't see a big future there. I will say the one thing that was a shining star was their algorithm, because it gives you like bonus points and extra features. There's a lot of like buy now software intuitiveness to the app that I will definitely give them credit for. But generally speaking, from a sales prospect, gosh, they have, at least 6 months ago, they had a lot of stuff to fix. And I can't imagine supply chains helping them at all. All right, Beach Life is here. Oh, just hi, Beach Life. Muhammad asked, do you think they'll have a turnaround? Let me look at it real quick because I haven't looked at it in a while. $3.91. I'm just going to put it on the board. $3.91. And I would have looked at it about 6 months ago when it was running up to 10 or 12. I don't know, man. Oddly, you have a fair value of 514 in Morningstar. So if it rebounds, I would say The best guess I have would be in this Morningstar area, maybe $5. You go to historic valuations, very low price to sales, which is good. However, I don't know that this company is going to be profitable, certainly not next year. So I'm not excited about it. I'll just put it that way. All right, so Beach Life is asking about Roblox, and I've been mildly infatuated with Roblox just because of the way their community is not only growing, but also just the monetization of the community. So I haven't studied it very closely. It has Morningstar fair value of 100, so you're about 20% over in that regard. Let's see. All right, no EPS yet. Doing about just shy of 3 billion here. That was a huge run up this year. And then next year slows down. If analysts are correct, right? 20%. Now you kind of have that COVID thing in there that I guess, if we all got locked down again, maybe Roblox blows up beyond belief. I don't know. I look at this chart and here we are November 8th at 77, and you ran up to 134, probably on good earnings, I'm going to guess. Let's see if this screen, I don't know if this is going to fit in here for you guys. If this graph loads, chart not available. Interesting. All right, chart not available for some reason. I would be inclined to let it simmer down. And just a couple things that I looked at, or if you're really excited about it, maybe buy a little bit at 124 or whatever that was. And honestly, that's the biggest thing that I'm doing right now. And I'm talking about, like, if you want 100 shares of stock, of any stock, okay? I mean, I'd be buying 5 at a time. That's what I'm doing. You saw that, of course, my Zillow purchase, which I did very slowly, started at $70, $80. Then when earnings came out, it tanked to like 50, and it went down a little bit more today. Just buying my 5, not trying to get stuck under a rock with full valuation over. Just kind of going down, but it has to be something you believe in. I could see Roblox being a good candidate for that, just because the strength of their community, but just really onesie-twosie on it, and hope that maybe you'll get a discount. I don't know how much higher some of these names can go when they don't have an EPS, so that's the only reason I'd caution you there. All right. Piyush, since ARK is no longer my top favorite, I've switched back to QQQ as forever. Keep buying it every month. I love it. So, Piyush, sorry if I'm pronouncing wrong. I'm adding QQQ to my portfolio. I bought the first share today, just one share, because we're up a little bit today. I have a lot of it in my SEP IRA, which is kind of like an ETF portfolio that I share on the channel. I need to do an update on that. It's a good time for it. But I have 25% QQQ in that particular portfolio. And as I led off this show, talking about looking for direction, which way are we going in the market as a whole, I think your strategy is about exactly what I'm going to be doing, which is just buying in. I love the top 100. I love almost every name in the holdings list. And I just started thinking to myself over the weekend, like, what am I doing? Trying to figure out right now which stocks are, guaranteed winners and guaranteed losers. I think I'm going to pause. I'll still buy, I'm not selling any notable positions to PayPal, Visa, what else is in there? Even Zillow, which just went down. Amazon. I'm not selling any of those. I'm keeping those, but I do want to work myself up to a solid foundation of QQQ, doing it the same way that Piyush is doing it by DCA. And there's a lot to like in that strategy right now, even if you think the QQQ is overvalued. So Piyush, if you have time later, I'll have a whole video about QQQ coming out in just a couple hours. So maybe you'll check it out. Mohammed, no problem. Trevor, how you doing? Hope everybody's good. Hope everybody enjoyed Thanksgiving break here in America and wherever else. If you had Thanksgiving break, or even if you just had a weekend, hopefully you enjoyed it. Let's see who's winning and losing today. Go to our Yahoo Gainers. Try to squeeze this one in. I know I got to switch screen here for you. I'm just getting it set up. All right, here's our Gainers list. 260 stocks that are up on the day. I like to sort by market cap, maybe. All right, Tesla up after, I assume Tesla struggled a little bit on Black Friday, as did everybody else. NVIDIA, ASML. So we're sorted by market cap, but let's try to pick through these percentage changes and see who really did well. So it looks like, you know, maybe above a 5. Royal Dutch Shell, that energy trade, for those of you who are focused on energy right now, that has really performed well. Not just Royal Dutch, but everything energy, quite honestly. Moderna, plus 11%. Obviously, the vaccine news. And Moderna was one of the first to come out in the press and say, there is potential we could have, if we need a vaccine modification, we could have it by the first part of 2022. So good news there, and certainly that press release, not just for Moderna, but for the general health of the stock market, that was very important. All right, who else? This is a penny stock, so we're just going to skip it. It's amazing that it has this market cap, though. Looking for 5s and above here, we got Lam Research. We have Bank in Russia. Lucid, so EV stocks must be going well. Coinbase, this is probably because of the bounce back in Bitcoin. So Bitcoin went down with the market on Friday and a little bit over the weekend too, and bounced back. There's Roblox for Beach Life, plus 5% today. So maybe, you know, maybe you're waiting for a not plus 5% day to buy in and try to get a discount. NXP Semis, so semis look like they're doing well. Fortinet, this is one I've been watching. People call it old school cybersecurity. Out of all the cybersecurities that are out there, particularly the CrowdStrikes and whatnot, I think what you'll find with Fortinet is that while this P ratio is high at 100, they do have growing earnings. If you can catch it on a dip, it might be worth it. Just get familiar with their platform, though. See, we have good growth here, double digits next year. It's not as sexy as some of the CrowdStrikes and nets that are out there, but you know, I've been intrigued by it. All right, Zscaler 574. Microchips, so chips in general rocking pretty hard today. Here's a 9. This is a shipping company. Compass Group, Lee Auto. I think we're getting down. I don't know. We're still at, 25 billion market cap. Expedia, I was surprised they bounced back today, even with the more positive look at this new variant. I think it's a little early to get super excited. Live Nation pretty much following suit. All right, so those are the winners, the notable winners. Let's take a look at the losers today, which if you're looking for deals is probably the better one to look at. All right, squeeze this in. And we'll do our market cap sort. Top of the list, Rolls-Royce, penny stock land. And let's just eyeball the percentage change. 6% for Merck, interesting. Cloudflare, down another 4% today. Unity Software, so interesting that Roblox is up and Unity's down. I don't know if there's a headline for that. Doesn't really say. There might be a rumor that's going on that I haven't been able to find. I don't know. But Unity, this one, it's one I used to own. I sold out because it kept dipping. And I think I first bought in 140 range. You're getting back to that. I sold out roughly 87. Can't remember. Don't know if it'll go back down to that level. But similar to Roblox, I said Roblox, I'm going to say Roblox. You've got good earnings, although Roblox is much better. They were at 200%. And you're knocking on the door of profitability in 22. Can they get there in 23? Maybe. And let's see what the valuation is here. So 50 times price to sales. I believe that is higher than Roblox. But now I can't remember. But both of them are missing an earnings per share. So you're playing a little bit with fire in an environment like this, in my opinion. So by the way, just to expand on that, if you got Unity today at 50x sales, and let's say tomorrow the price drops to 30x sales, I mean, can you really say to yourself that that's the bottom? I don't think you can, because that's how high some of these have gone. Affirm, minus 3.4%. I'm a little surprised at that, although fintech's getting blasted lately, only because it's e-commerce season. I don't hold Affirm. I lean more towards Visa and PayPal, but you know, so be it. Etsy, I just sold out of my Etsy a couple weeks ago. Can't remember the price. I want to say $287. Love Etsy, so well managed. Just a great company, but I took so many losses this year that when it jumped up to this number, which is a little absurd, I decided to take my profits. What's that? Airports of Thailand, I don't know anything about it. Sands, China, which this would be Macau. They've always, they've been on a bumpy road ever since some of those regulations have come in, so no surprise there. Novavax, that's pharmaceuticals, but I don't know what kind. Marqeta, this one's on my watch list and it's at its 52-week low. This is, I believe, Latin America, and it's kind of like a square. I'm trying to remember here. Card issuing and transaction processing. So, maybe it's sort of kind of a Visa of South America, but it looks like they are actually in Oakland, California, but they have some stuff that goes out internationally. Kind of interesting at this price, but it's in an absolute tailspin. So see this? $31. Oh, it just came out in June. $31 down to $20. No profitability this year or next. Projected sales, you'd have to get into the investor report to figure out what the comp would be this year. Next year at 30%, just keep your eye on it, read about it. If that turns into a really cheap stock, it might be worth throwing a dart at. 26 times sales, I think, though, is going to be a little high when you compare it to similar names. Just a matter of you figuring out what is a good price to get in at. All right. Anyone else on this list worth calling out? Weibo, which is Chinese. I think those are the big ones. We're down to about 5 billion market cap on our sort. Quaker Chemical, I don't know them. All right. So we have some other questions, so let me get in here. Oh, let me show you two. I was on Yahoo Finance today, guys, in the morning, so you can go check it out. Search Twitter. I'll tweet it or something later, but I've been running around today making videos, being on Yahoo Finance. I talked about the QQQ, if Piyush is still here. So he had excellent timing on his question for today. So a little bit in the morning, nothing big, just like whatever, 5 minutes that I was in there, but kind of fun. I'm making friends with some people over at Yahoo Finance who work on the product side, and hopefully, if I'm lucky, I'll be able to work out a sponsorship or something with them, because I do use the program quite a bit. All right. Let's see. Jacob, wish I listened to you about Wish a few months ago. Would have saved 40 G's. Goodness. Well, don't get me wrong. I've made my share of mistakes this week too. I felt like Wish was a little easier to diagnose than some of the other mistakes that I've made, just because, like, those app store reviews, number one, you can always tell which ones are fake, because they're, it looks like non-English speakers have written them. And then the ones that are bad, they're so detailed on what sucks about them, and I think most of the people that I saw, I don't want to say most, how about 80% of them were people who bought stuff that never showed up, or it showed up like 60 days later. And if you're working e-commerce, I don't care what the sale is, 60 days later, it's just not going to work out. All right, Michael, it's Alaska. My favorite right now is QQQ, finds top 21. Oh, QQQA finds top 21 NASDAQ stocks with highest RSI, not a leveraged fund. So I'm not familiar with that. Let's take a look at it. One thing I'll say about Yahoo, even though I do like the platform, I would say that the ETF portion, there are deeper platforms out there if you're just focused on ETFs. Let me bring this one into view. Let me make sure, how long has this one been around? June of 21, so it's a young one. And they don't even have, unfortunately, all the expense ratio and everything, so it's hard for me to judge from here. But according to Michael, finds the top 21 NASDAQ stocks with the highest RSI. So I'll take his word for it. Dorsey Wright Momentum. He says it's not leveraged, which, I don't see. Normally, if something is leveraged, it would put it right here. Just say 3x leverage, whatever. ProShares does do some leverage products, but yeah, thanks for sharing that. I'll have to read more about that one. All right, who else we got here? Jacob Burton, Nano Dimension. So that was a hot stock for a while. A lot of people asked me about. I had not looked at it in some time, but here's what I got that's available to me. We have Morningstar gives it 751. And let's see the last month. It's on a slide the last month. Year to date, so the $15 peak is right during the highs of February, which we know a lot of stocks had huge highs in February. This was a lot of my problem, not for Nano. This year, my biggest mistakes are right in this time frame when stuff just kept going up. Enphase, Unity, I think PaySafe came out during that time. I just bought it hook, line, and sinker. And thank goodness for me that I don't buy huge lots at a time. You know, I have 100 shares here, 200 shares there, but it cost me the year, big time. And then as they sank, sometimes I put more money into them. And then when we ever got a bounce back forever, you know, heading into the summer, and this is Nano's chart, it's not representative of everybody's, you know, I gave up on them. And I was like, screw it, I'm taking the tax loss. Now, Enphase and Unity went on to do well. I should have hung on to them, but it's easy to say that when valuations aren't very grounded. And you want to hang on to it, but you also know that, like, fundamentally, there's a reason these are falling. Let's see what Nano's cooking up for next year. It does not have too many people following it, only one analyst. Let me see if I can find it on TipRanks for fun. NNDM, because they will sometimes have more analysts. No. So I guess, like, just me personally, I don't have enough projections to really feel good about it. And stock hasn't been out very long either. So kudos to you if you know something about it, inside information, something or other, but I do not have any of that. Michael says NVAX was at 18 before COVID. It's 205 now, so maybe that one's just dripping out a little bit. You know, maybe rightfully so. So, you know, vaccines, which if we get in that world where you start seeing that again, Johnson & Johnson, Pfizer, take your pick, you know, if you really stack those up against those companies like whole revenue, it's not the stream you think it is. Now, over time, if COVID is a thing, let's just say for 5 years, and it doesn't end up being like polio or something that's eliminated, then yeah, like the research and development costs will offset every year that they sell you a booster shot. But just relax a little bit on vaccine companies as they relate to COVID, because one, we're starting to see massive competition in the space. You got some big dogs in there. And then number two, if you're selling to the US government and the scale that they are, I mean, they're selling these, I don't know what they're selling them for, but trust me, it's pennies of profit per dose, okay? It's just the way it goes when you sell to the government. And, you know, J&J, Pfizer, et cetera, United States-based companies, they're in no position to milk the government for more profits, because the government can help them with other things. And I don't want to get too tinfoil hatty on you here, but let's figure you're J&J and you're having, let's just say, regulatory issues with other parts of your business, whether it's like a heart medicine or a lawsuit or whatever. You know, you can partake in supplying the government with things and at a meager to zero profit, and the government can open other doors for you where profits can be had at a much bigger pace. So they could open up the doors of regulation. They could open up the doors of your corporate structure, perhaps mergers and acquisitions, so that in the long run you do make a ton of money, but it won't be because you're selling vials to the U.S. government. It's just not going to happen, okay? But, you know, I would say those companies, from a brand standpoint and a recognition standpoint, it's a good play. It's also, dare I say, the right thing to do which we don't get a lot of in corporate world all the time, but I don't see it as a huge profit machine. Beach Life Disney. So it's hard to argue Disney over the long term. I mean, I don't know who would stand on a mountain or a soapbox and say Disney is a train wreck, because it's really not. But what we are starting to see headline-wise is maybe some chinks in the armor, right? That there is perhaps a plateau, a sooner plateau of Disney Plus than we thought. And now, coming off this weekend, you have, oh God, what happens to the parks again, right? So, excuse me, let me get a drink. So not just the parks in general, not just like, will the parks be open? Because, hopefully we're past that part. But now you're going to cut down international travel. If you've never been to Disney World, you've never been to Disneyland, when you go, there's a ton of foreign travelers. You're usually sitting in quite the melting pot of different languages being spoken, et cetera, et cetera. So maybe if I had to speculate, I would say that the outlook for Disney is not necessarily bad, but it's not infinite growth like was sold to us at the beginning of the year when it came out. So you're at 386 this year, 506 next year, 25% price gain, potentially 11%. But if we go back historically, so what did we say, a $5 EPS potentially for next year? Was that going to be on here? Darn, I got to pull up a different chart. Disney historically has made a lot more money than that, okay? Let me go to Seeking Alpha. They do a good job with showing earnings across time. And let's see how far back they go. All right, so we said $5 a share. If we go to, well, here's 2017, Q1, 2, 3, 4. And we just have to add it up in our head. $1.55 plus this is $3.05, plus this is $4.63, plus this is $5.60, $5.70. Didn't do good there, adding it up, but let's just call it $5.60. So next year's calculations or projections of whatever this is, 506, is still less EPS than 2017. And if we go here to 2017, forward PE of 15, I'm going to have to get out my calculator here. 1 second. 15.3, actually that would be the trailing, wouldn't it? So let's do this number, 1745. 1745 times 570 is $99. That's what Disney was back then, okay? Now you see where the change is, real quick, sorry. So we were here with more EPS. Now we're here, forward P of 32, double of 2017, with less EPS. So it's not that Disney's going bankrupt, it's that Disney, now that the excitement is over and there's more risk at the table, this multiplier seems a little bit out of whack, I would say. So anyway, that's just me looking at it straight by numbers. If I remember correctly too, with Disney, they, let me see if I can find a headline. they came out and said basically that they're going to spend bazillions and bazillions of dollars on content creation. And that is a little bit nerve-wracking for investors. I don't have the headline. But the reason that's nerve-wracking is because so many people that have failed doing it. So I think Netflix, they spooked all their investors when they were going to do it. That's starting to probably pay off now. But if you're going to blow that money and with the hopes that, that content drives revenue, it's not easy. Now, Disney probably has the edge over Netflix as far as ROI on content creation multiples because they can throw it in the movie theater. I'm waiting for the day that a Netflix movie shows up in the movie theater and what that world will look like, but we'll see. So I guess to summarize with Disney, if you're going to buy or you're going to add, then just nickel and dime it, man. 1 share today, 5 shares, next week. Just wait to see, because if we do have an overall market correction, even if this is today's floor for Disney at 148, then the market correction would obviously take it down even more. So I, for one, am trying to protect myself against the downside going forward. I took enough lumps this year. 1 or 2 is part of the game. When it starts to become more proliferated, as it has, particularly when Visa and PayPal took a hit here recently, now I'm starting to get mad, and I'm starting to say we need to make sure that we're protecting to the downside. I don't want to lose money. That's not why I'm doing this game. So hopefully that makes sense. All right. Fly on the wall. Any thoughts on Amazon over the next 6 months to a year? Yeah, a lot of them. I hold a few shares of Amazon, and I am excited about what they're doing, okay, which is just literally dumping money into the infrastructure, particularly the delivery infrastructure. There was a headline today. I keep saying headlines, and I'm having trouble. Oh, here we go. This is what I mean by infrastructure. Amazon set to become largest U.S. delivery service by early 22, surpassing FedEx and UPS. This is an executive saying it, so we'll leave it when it says it. We expect we will be one of the largest carriers in the world by the end of this year. I think we will probably be the largest package delivery carrier by the time we get to the end of the year, if not early 22. Amazon's in-house delivery has proved a major advantage, blah, 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 blah. Growing collection of planes, trucks, and ships, da, 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 da. You get the idea. So if you're a bear, if you don't like Amazon, then you say, that's great, but you make, 1 or 2 percentage points in every retail sale that you do online. So, the only reason Amazon even makes money on the retail side is because they do it on volume, not on margin. That is 100% true. However, when you start to get to this world of a delivery network that's bigger than FedEx or UPS, when does that margin start to grow? It's probably not next year, and they're planning to spend through next year and probably into 2023. But there's got to be a game in the long term where that pays off big for margins. And I know that Fly on the Wall said next 6 months to a year. I think that they've set the tone with these expenses. These are already known, okay? They've already laid them out. And where things go from here should be slowly up. Now, 3-4 months ago, I anticipated Amazon would hit 4,000 share price by the results of the Q4 season. I'm not 100% sure that's going to happen by January. I think, let me just see. We don't know when their earnings date is yet, but Yahoo gives you an estimate. Jan 31 to Feb 4. So I thought they'd hit 4 by then. That could still happen, but I would say that I would feel a little bit better about maybe heading into Q4 next year, just where the market is, right? I think that we're sensitive to valuation right now, generally speaking, and Yahoo is running, I wouldn't say it's hot. I'll show you this. I wouldn't say they're running ridiculously hot compared to historical years, but it is a 54. Okay, PEG ratio is at 2, so maybe this should come down. Price to sales at 4. I don't know. If you want to, if you're looking for the catalyst, and I don't know, I couldn't say if this would happen, but strong AWS sales. So the expectation for AWS is very strong anyway. And now we have a situation where they would really have to outperform, I think, to boost the stock price from here. AWS. I think the retail side is probably predictable, and supply chain, employment, salaries that they've had to raise, all those things look like they'll be a thing through summer of next year, in my opinion. So the only surefire bet to set a new floor is for AWS to outperform. But I'm holding long. I have absolutely no plans. If for some reason there was a market correction, Amazon went to or below my cost basis, I would add another share or two. Absolutely, for sure. And if you get into QQQ, you'll have more than enough Amazon in your portfolio. All right, Louis Custodio, thoughts on PayPal? I'm holding. I'm a huge PayPal fan. I'm a huge PayPal believer. Unfortunately, even as that is true, I could see, I said it earlier, we're at 187 today. Honestly, if it was 170 and potentially a hard dip below if there was a market correction, that would not surprise me. It is running hotter than it has in the past, and I think that it deserves to be running hotter valuation-wise. See here, we're at 35 now. It's settling down, but you can tell that, 2018, 2019, you're in that 30 cap. So you'd have to take another 5 points off of this valuation to really start to say maybe it's the bottom. So just be careful. PEG ratio, again, over 2, similar to Amazon. You're in ones historically. So I love it. I'm not changing it. I will add more below my cost basis, but do not be surprised if you see some more downhill from here. Not a ton. It's not going to go to 125. Or if it did, I think we'd all be excited. But just, temper your expectations for upward movement from here. Apps. I can't figure out apps. I've looked at it before. This is Trevor. Looks to be like a good company in a growing space. I think the last time I looked at it, let me confirm. Yeah, I take it back. I was going to say sales will slow next year, but it doesn't look horrible. I mean, 33% in a normal year without COVID is pretty impressive. And you're growing EPS. You're at 215 projection for next year, which puts you in the 20s. I mean, that's not bad. This number's wrong because 215, well, I don't know what it did today, minus 80.86. 54 divided by 2 is 27. So you're in the 20s now. And I guess the question is conviction at this point. I don't know enough about the company. I haven't studied it to have a particular conviction about it. But you're back at January 4th levels. And let's see our 1 year. 1 year ago was 42.95. Morningstar fair value now at 55. Maybe there's a small discount in here, but like everything else, if we go to 1 month, you know, what's the floor? Is this the floor? It's so hard to tell these days. It really is. But, you know, you got a company that is producing an EPS. So theoretically, in my opinion, if you have an EPS, you have a floor. And when you have a floor, it really can help you. Just make sure you stay cognizant of what that could be. All right, a couple more I got to run. Igor QQQ will keep pumping. Thank you. I agree very much. Derek's here. Good to see you. QQQ is kicking my butt, but I'm slowly transitioning over. I'm with you. Check out my video coming out here in a little bit. I just think, Igor, even if you trade individual stocks, which I'm not necessarily giving up on individual stocks at all, but man, just throwing a couple QQQs in your portfolio, just, I mean, I sat on it this week and I'm just like, what am I doing? You know, like, where's my safety net? And for me, it was PayPal and Visa when they got rocked. And Visa's facing problems today because of freaking international travel. It's such a killer. You know, I don't think international travel is looking very good for the holiday season now that they're closing off borders and stuff like that. So you want to find something that you believe has a floor. I think the QQQ has a floor. Whether or not you think it's overvalued today, fine. You know, I'm not going to argue that, but I'm going to say compared to the dot-com crash, we have things in the QQQ today that have earnings. Okay, Apple EPS, Google EPS, Tesla EPS. Go down the line. Now, there's a lot of stuff back in those days, 2000, no earnings, pie in the sky kind of stuff. There's some pie in the sky in the queue. However, I think that the lion's share of the companies, certainly at the high end of the weighted index, have a definitive floor that will prevent QQQ from going. I mean, zero is not even a discussion, right? I would argue that a 50% downturn in QQQ is not even in the discussion. You might be able to pose a scenario for 25-30% if, like, a Tesla and NVIDIA just got absolutely wrecked. But their fan clubs are so big right now that I don't even know if that's true. Anywho, Joe Schmo, thoughts on DBX? All right, I'll take a couple more here. Oh, is this Dropbox? Never been a fan of this one because of what the big dogs can offer between Google, Microsoft, etc. Let's see what analysts are saying. Yeah. So $1.49 this year, maybe 9 cents more next year. Single-digit growth next year. Valuation, you know, that forward PEs looks good for a tech company. Let's go pre-pandemic. Yeah, I mean, the forward PE is going in the right direction over the course of 3 or 4 years. It continues to come down. Pay ratio over 1, so there's some fundamental to it. I just like, I don't know. I'm just not feeling their service offering. But let me just be clear that I don't read their earnings report every day. I just realized I didn't show you guys everything. Here's what I was looking at. Forward PEs coming down over 4 years. Here's your consensus estimates, adding about 9 cents. I mean, again, I always say this year is over. Okay, this year is over. We're still living in this year, but for all intensive purposes, these numbers will either be spot on or, plus or minus a couple percentages above. So now the focus is 2022 if you want to get into PEs and earnings per share. Right now they're only 9-ish cents ahead, and then here's your single-digit sales growth. Do they have a trick up their sleeve? I'm not sure, but I don't see it as a bad investment as I looked at those numbers at all. But I worry what it is they offer that you can't get in other places, and maybe I'm just not familiar with the products enough. Curie, don't know it. Curiosity Stream. This was what? Not Penny Stock Land. Was it Penny Stock Land last year? So if I remember, this is a streaming play, kids, programming. They do have some good projected growth. Just look at this though. This is a world I'm not playing in. Not Curiosity Stream, but it's where I've learned some hard lessons this year. There's not a ton of money. Okay, this is under $100 million, which basically Microsoft makes in a day. Then you're up to 122. Great stuff. Great stuff. It's just I've been burned too much this year. I'm sticking with fundamentals. There's not enough here. However, you got some good signs on price to sales coming down. It's just pick your poison. I don't know enough about this company. All right. Armand's talking about, AMD is getting hot. Although if you stack it next to NVIDIA, I don't know what else you can say, but gee whiz. 324. Next year, 333. This has got to be one of the higher valuations for this one. Not even really. 47 right now. Pre-pandemic, you had a 43 and a 35. It certainly has a price for perfection in it, though. I would not buy AMD at this price. There was a time here recently where I was very intrigued, and when it was around $100 pre-earnings, and I thought, that's not a bad price, but I'm not paying 62% more for it. And as we've talked QQQ so much today, you'll find AMD inside of that. All right, guys, that's it for me today. I'm really thankful that you guys all came out. I hope everybody's doing good. Just to be totally transparent, I'm doing tiny little bites right now. I think the market has lacked direction. I think that the path of where things could go from now, the choices are getting broader and broader. I don't think we're in a flip of a coin of up or down. I think we're at an individual stock level of this could happen or that, and then this could, go on top of it. All that being said, I'm being very careful, and I, hope you guys are too, because you don't want to wake up to that correction day after you just bought AMD at $162. So watch what you're doing out there. Stay safe. We'll see you on the next video.